Welcome to an in-depth look at how credit cards became an indispensable part of the American economy. From simple concepts to digital powerhouses, their story is one of innovation. Before the plastic revolution, how did Americans handle transactions and credit? Let's step back to the time before universal credit was a reality. Transactions were primarily handled through barter, cash, or limited store-specific credit accounts, requiring physical presence or complex accounting for every purchase. The complexity and lack of standardization across different businesses created a pressing need for a unified, widely accepted credit system that could transcend local boundaries. The 1920s to the 1950s saw the first true attempts at modern credit, paving the way for the cards we use today. Early credit involved quote-unquote charge plates and proprietary store cards. These were limited, only usable at the issuing store, but they familiarized consumers with the concept of plastic credit. The game changed in 1950 with Diners Club, the first multi-use charge card, initially targeting travel and entertainment sectors, allowing payments across multiple affiliated businesses. The true bank card revolution began in the late 1950s and early 1960s, shifting credit from individual businesses to the financial institutions themselves. In 1958, Bank of America introduced Bank Mastercard, the predecessor to Visa. This marked the start of general-purpose bank credit cards that were not limited to travel or dining. A controversial step was the Great Mailing, where banks, including Bank of America, mass-distributed unsolicited credit cards to millions of potential customers, dramatically increasing card penetration. Efforts were made to standardize the system, allowing regional banks to cooperate and create interoperable networks, thus making bank cards universally acceptable. The 1970s and 1980s introduced crucial regulatory changes that protected consumers and fueled the explosive growth of credit card usage. The Truth in Lending Act of 1968 and subsequent regulations mandated clear disclosure of terms and promoted fair credit practices, building consumer trust in the system. Credit cards transitioned from being primarily for travel and entertainment to general consumer credit, allowing purchases for everyday goods and services. This era saw the formal emergence of modern, globally recognized card networks. Bank Mastercard became Visa, and interbank associations coalesced into Mastercard, establishing powerful payment infrastructures. From the 1990s onward, technology fundamentally reshaped how credit cards function, integrating them seamlessly into the burgeoning digital economy. The introduction of ATMs and electronic processing revolutionized access to cash and simplified transaction authorization, making credit cards more flexible than ever before. Competition drove the shift towards enhanced customer incentives, including sophisticated rewards and loyalty programs, alongside significant improvements in security features like EMV chips. Today, credit cards are deeply woven into the fabric of the American economy, acting as powerful tools for commerce, finance, and consumer convenience. They truly cemented their place in our financial lives.